Lakshmi, fantastic to have you back on ET. I'm really speaking to you after a while, so it's so nice to connect with you. I'm going to first
Very good to
start
see you.
with the obvious comparison. The obvious comparison is that for the quarter gone by, Tata Com revenues are down, EBITDA is down, and margins are also down. Do you think
Yes.
your business is also going through a downturn and a slowdown, pretty much what the IT services sector is experiencing, or we should not compare?
No, Nikunj, I've always said that we shouldn't be comparing directly to an IT services business. If I would like to take a bit of a long-term view, and if you look at our full year, what we've managed to do this year in FY23 is, in our data revenues, we've incrementally added more revenues than what we've added in FY21 and FY22 combined, which is very significant. If you look at our digital portfolio, that's grown over 15% year on year. And not just for 3 consecutive quarters of growth of double digit, we've also delivered a full year growth of a double digit, 10.3%. So we are in a very good place. I'm very, very pleased from where we started out when we launched our strategy 3 years ago, calling out our ambition for double-digit growth in the medium term and to deliver on all the other parameters of getting our EBITDA that was at 16% to 23 to 25% range, and our ROCE that was at 8% when I took over to now we said 25% plus, we are at 28% ROCE. So we are very, very excited about what we have done. And more excited about how we look to the future in terms of how the company has transformed to become a comtech player. We visualize ourselves to be a digital fabric upon which enterprises can build their own applications, right? So, and our relevance to our customers are ever increasing because in our portfolio, we have platforms that will enable the customers to execute more a cost-led transformation, and which is very relevant, both across all international markets because people are looking at cost with a very sharp eye, and our portfolio lends itself to a cost-led transformation that delivers not just on the cost side but also on superior experience for their consumers and customers internally as well. So, I think we are in a very good place.
Lakshmi, a number which perhaps we need to bring out for our viewers and for your shareholders is the employee addition. The employee addition, what TCOM has reported for the quarter gone by and for FY24 is a very impressive number. Is this some kind of an indication or indirect guidance of your confidence going forward?
Absolutely. We are staying course on our strategy. The people addition go into the frontline sales, marketing, solutioning, which I had called out even a year ago, saying that we require to invest in these markets for now people to start taking the new products and solutions that we are bringing out. And the second part of the investment of these additional people goes into strengthening our products and platforms, and we're building out very exciting new platforms. And when we have more time, I can talk about that a little bit more. And the third part of the people addition goes into servicing what we have won. So these are the 3 buckets of the people addition. And these are absolutely required. Our order booking this year that has gone by, significantly increased over last year. Our funnel addition is one of the best that we've had over the years. So, and we need to be able to continue to invest because without investing in people, investing in products, the growth is not going to come. And we are going to be left in a catch-22 situation if you only keep looking at the EBITDA numbers and quarter-on-quarter numbers.
But Lakshmi, for a business where the rate of change is constructive, where the customer centricity has only increased, where order books are increasing, why is there so much of cyclicality in the business? Is this the nature of the business you are in? And do you think this will continue for FY24 as well?
Cyclicality, if you mean again from a quarter-on-quarter perspective, yes, there is some cyclicity in that. So if you take our media business, for example, it depends on number of events that we do in a quarter, right? So from an overall year perspective, the media business has grown, whereas this quarter it's a decline. So there are aspects of our business that are cyclical, but in our overall digital portfolio, we would like to steer more towards looking at the overall portfolio. The digital portfolio has grown overall in the year, and we think we can grow in the coming year, despite some of the macro that we see in the international markets.
When I speak to analysts who track your company, some of your large shareholders, they are giving a lot of confidence in the fact that your order book is growing in between quarters, and if I do a year-on-year comparison. Could you walk us through the size and also the quality of your order book? Because that is more important given the fact that your nature of a business per se is changing.
Yeah. So there are a number of flavors to look at in the order book, Nikunj. One is if you look at the digital portfolio itself, our digital portfolio order book last year was more than 40% of the overall order book. So that's a very good sign to see how the traction on the digital portfolio is. The second is, we track, what we call as large deals. It's $1 million annual value. That's what we classify as large deals in the company. And if you look at the large deals, that has grown quite significantly in the last year. And because that, was one of the indicators for us to see, can we go to a customer to be more relevant? Can we construct a deal that is large enough across all these portfolios? Because prior to that, we had a lot of deals, but, a lot of smaller ones, and it was running very, very fast to stay in the same place as it were. But now we are seeing the color of that change, where we are seeing larger deals, and the number of large deals we have done is significantly improved. Our win rates, and not just our ability to participate, but win in these markets, that is improving as well. So overall, if I look at all of these indicators, that gives you a color of what the order booking looks like, and the color of the funnel, it's pretty good.
Just to clear the air, and since this is the word which everybody is using in the entire IT universe per se, for Tata Com, for next 2 to 3 quarters, in your understanding, there is no slowdown and there is no chink in the armor. You are confident and you feel that FY24 will be another strong year of transformational growth, not just incremental growth.
That's what we are all working towards. And we are staying course on our strategy. As we said, we continue to invest. We continue to see good traction. As long as the customers are still going to be, in the path of their digital transformation, and more so a cost-led digital transformation, we don't see, slowdown in the momentum that we've been able to pick up in the last 3 quarters.
The fact that your Q4 margins were at the lower end of the range,
Yes.
Can I say that for FY24, margins automatically should expand towards the upper end of the range? Your stated guidance band is 23 to 25. Will it go back and normalize there?
I think 23 to 25 is our aim. But I wouldn't be too fast if it continues to operate at the lower end or even marginally low, because this is a period where we have called out that we need to invest, and we have invested, as you said. The cost of the people that we've added will pan out for the entire year, this coming year, and we have to invest in strengthening our products and platforms. So that, and also we have an acquisition that we announced, which we said we'll have a PMI cost. The post-merger integration will take place, and that will come into play. But all that being said, our focus is to see how do we deliver better return on the ROCE. We think that will be in the guidance of what we've said for the company. We will deliver better EPS. I think those are the things that matter to our investors, and we would definitely deliver that.
Lakshmi, over the years, Tata Comm has significantly brought their debt levels down. If I look at your cash flow, the cash flow has gone up from an average 300 crores to about 600 crore. While you continue to reduce your debt levels, are you looking at making Tata Comm net debt free, if not in FY24, maybe in FY25?
I
The
think
smile is telling me the inside story, sir.
no, because this is something that we all discuss and debate internally as well as with many people. See, our priority is as follows. One is growth, right? And as we grow, focus on the conversion of EBITDA to cash, which we've been doing extremely well. And once we have the cash, we want to invest back into the business to fuel the growth. We see many upsides in both our portfolios as well as in the markets, and we need to be investing in those. We can't be short-sighted on these matters. So we would be investing, and whatever is left, we will be addressing the debt to see if that we can reduce it. But our priority is in that order.
Since you're sitting on surplus land, 750 acres, isn't that the easy way out to sell it and reduce debt?
I think a simple answer would be yes, but there are complexities involved in how we deal with these land parcels and assets that we have, and we are going about it very, very systematically. And so there are many steps that we have to go through in terms of its usage, its title, its paper, and everything else, and we are having a very good monetization strategy on that. So that will, as and when, so we're not linking all of these things. So as and when that happens, then we can either reinvest back or reduce the debts. All of that is a possibility.
But is that something which you hope to seal in FY24, the land monetization?
No, it's a long-term effort. And we are continuously doing that. We have done a few now already, and we will continue to do that because, as you can imagine, each of these lands are in different parts of the country, different steps that we have to take, and the right monetization opportunity also has to come by. So we are having a dedicated team, and it needs to be optimally done, and we don't want to rush it. So that's why I want to take these two streams independent of each other. So that will run a stream of monetization strategy and the execution of that strategy, and the business where we are investing in our platforms, and whatever comes off that, if we can invest into our platforms or to reduce debt, we will be doing that. But we're not going to be linking these two.
So the rate of debt reduction, and you'll appreciate the spirit of my question, because if you reduce debt, the enterprise value and the P multiple of the stock will change. The rate of reduction was about 9%. Will this 9 to 10% debt reduction pace continue for this year as well?
That we haven't really modeled to tell you how that will happen, because we are going to be investing in the business. So from a debt perspective, all I will say is we are at a very comfortable level, and our focus would be to invest back into the business. And if, for example, land monetization, anything comes through, we can reduce it. But if you have to even marginally increase it, we are comfortable to even increase it to a level. So we are not linking these two, Nikunj. If you get the answer that I'm giving, we will not be linking these two. And it's like an M&A. So we are doing one M&A transaction, and we have a team that's looking proactively into what other opportunities are. But I'm not going to be linking that to saying I have to do this deal in order to get my top line, because that would be a wrong thing to do. As and when it happens, that will help us to bring inorganic growth. In the same way, the land parcels also, when it's the right time, the right price, then we will do that, and that might help to reduce. But I'm not going to link that to dedicate, to force certain transactions to happen.
I distinctly remember we had a conversation when FY23 had started, and that time the Q4 volatility was there, and Q1 volatility also in FY3 was there. Do you see that same kind of an volatility panning out this year as well, or FY24 would be different?
In what sense are you referring to volatility?
I'm talking about the numbers. If I compare the start of FY23 versus the start of FY24, how do you think it is different? Will it be a volatile year, or will it be a more predictable year for you?
No, we think we had a very predictable year because I've always been saying that we are looking for double-digit growth and the range of 23 to 25%. So we are looking more at our business on a yearly basis, even though we run on a daily and a quarterly basis. So, we had very good start last year to Q1, and that helped the entire year as well. So going forward into FY24, we are quite optimistic, as I said, based on the order booking and the interactions that we are having with our customers. We think we will keep the momentum up for FY24.
So we are looking at a margin range of 23 to 25% and a double-digit growth for FY24. Can I assume that as your forward guidance?
As I said, our strategy is to deliver consistently. We said double-digit growth, and we have achieved that this year. And I would like to maintain that going forward. We would like to maintain that. And similarly, on the margins, 23 to 25%. And as I said, we are investing, and even we are coming at the low end. I would not be too fast. We will be delivering on our ROCE guidance. We will be delivering on free cash flows and all of that. So yes, you might broadly say that we are quite excited about where we are, and we are quite excited about how the future holds.
The last question, Lakshmi. I'm going to take the clock back before I take it forward. I've had the pleasure of tracking Tata Com for years now, and what I've seen is that there is definitely a strong rate of change in terms of business, platform, margins, employee addition. It has really ticked all the right boxes which shareholders and analysts they look at. But the hard work has been done. Once the hard work has been done, there is always a time to reap the benefits. Are you there where you are ready to reap the benefits?
No, I think the hard work never stops, Nikunj. So we, internally we say that we launched the strategy 3 years ago, and I would say the phase one of that execution is done. We have taken on all boxes, as you said. The growth was the one elusive factor, and this year we are very pleased to see that double-digit growth coming as well. And our phase two of this journey begins. Our strategy remains the same. Our investments into product and platform. We have much to do. In international markets, our market share is tiny, if I may use the word. And that's very exciting as well, because that allows us so much more headroom and headspace to grow. We have much more to do. So it's not a time to sit back and reap the benefits, as you say. We have been reaping the benefits of all our investments. It's not come easy in the last 3 years. And even this double-digit growth had required a significant transformation on not just the product in terms of people, the capability, how we take it to market, and a lot of hard work. And kudos to our entire team for having delivered that. But we're not going to rest on this, because there's a lot more of hard work to be done to take the company where we want to take it to.
Very inspiring to hear that, and kudos to the kind of good work that's happened. So I can say that Tata Com के अच्छे दिन नहीं, बहुत अच्छे दिन आने वाले हैं.
Thank you. I'll take that as your wish.
Thank you very much, Lakshmi. Always a pleasure.
Thank you.